Hi everyone. Let's take a look at problem 6-1A, where we're going to take a look at inventory cost flows, and the company uses the perpetual method. Okay, first let's tackle the first requirement, which is compute cost of goods available for sale and the number of units available for sale. Okay, we have the information in front of us, and I've gone ahead down here on the bottom of your screen and typed the information in so we can take advantage of Excel's math capabilities. I've listed all the purchases we've incurred by date. Okay, so we had a beginning inventory from January 1st, then we had purchases on February 10th through September 10th. In fact, why don't we relabel this one January 1st, and I'll put it BE to stand for beginning inventory. Okay, we'll expand this a little bit, maybe shrink this one a little bit so that it still appears pretty good for you. Okay, so then what we're asked to do is compute the cost of goods available for sale. Now, keep in mind that when we produce cost of goods available, I'm going to put dollars in here, that it's the same regardless of whether we use Fifo, Lifo, specific identification, or average cost. It always would be the same. Okay, so now let's multiply across the units times the cost per unit that we paid. Oh, and probably let's format this a little bit so we understand what we're looking at. And we will let me do this real quick. No decimal places. Then we'll put these two with dollars and no decimal places. Okay, and now that I have that, I can multiply down, and then this, then just get rid of the dollar sign. Okay, so if we wanted to produce total cost of goods available for sale, we just sum. Okay, so I'll use Excel's sum feature. Right, there's the sum from cell D24 to D28, and I come up with $80,070. Now that's the total purchases, but that also represents the total cost of goods available for sale. So now I'm going to rechange that label and label it as cost of goods available for sale. And that takes care of the first requirement. Okay, on part 2 it says compute the number of units in ending inventory. Alright, well, let me stretch this a little bit. There we go. Okay, now I've got the columns spread. So if we just total the units here, we get 1845 units available. Let me slide a little bit up so you can see it. And then we just need to compute how many units were sold. Well, I'll just do this right here. They sold 600 and then 650, so that's 1250. So what I'm going to do is say less units sold, and I'll type in the 600 that we sold on March 15th and the 650. Let me format that, and I will come up with the number of units in ending inventory. We'll just say in units. Okay, and so if I take that number less the 1250, I've got 595. And that takes care of part 2, everyone. Okay, now let's take a look at part 3, where we're going to compute the cost assigned to ending inventory under 3 different methods. First, let's do Fifo. And I've typed a little bit of this in ahead of time. Alright, so let me show you what I'm doing here, and I'll explain my solution. Okay, with Fifo, first one in is the first one out. So we do a layering approach where we assume if the first one in was the first one out, then the last one in was the last purchase. So we know we have 595 units to account for. That's why that matches that. We purchased 545 on September 5th. So we assume since that's the last purchase, that's still on hand. So all I've done is reference that cell and reference the cost. And if you see, this is a layer. So this row here represents that last layer that we purchased right there. Well, then we have 50 more units to account for. So what I did is I took the 595 of ending less what we've already costed in Fifo to come up with an extra 50 units. Then I reference the cost of that. So this layer here represents what's left of this purchase layer, a purchased amount on that date. I think of it as a layer. And we extend that by multiplying the units times the cost. And once we come up with the total, we come up with the Fifo ending inventory. And the cell I have highlighted there, the 27,570, is the Fifo answer. Okay, then we take a look at Lifo. Now Lifo is a bit more complex. Again, you think the last one in is the first one out. Now I'm going to show in the illustration what happens. We started with 600, we added 350 and 200, and then had sales of 600. Now I'm going to do this math sort of visually here. I'm not going to do it in Excel. So what that says is that 600 units using a last one in, first one out meant we shipped the 200 from the March 13th plus the 350 units from February 10th, leaving us 50 units. Okay, if we sum those together, that's 550. So we liquidated 50 units of that January 1st beginning inventory amount. Okay, you guys all follow that? I'm assuming you do. So what that tells us is that 600 sale liquidated 50 of those units. So now we only have 550 when it came time to make the ending sale. Okay, so of that 650 units, we see that that purchase is more than the 650 units. Okay, so what that means is they didn't have to go back to the original purchase to take any of the units out of there. Okay, now having gone through that, let me bring a little bit more to life here. I think we can do our layering. We can say what we assume is, since of the second sale we didn't have to liquidate back to the first, the last one in is the first one out, we can assume then we still have that 550 units from the beginning. And the reason why it's not 600 units is that intermediate sale that took place on, was it March 15th, I believe? Yeah, the March 15th sale had to use 50 of those units. So we have 550 at the early amount. Let me copy this here. And then now we know we have a certain amount left to account for. So we'll take the 595 less the 550 we've accounted, and we've got 45 units. Okay, again, now we work backwards. We know that that 600 liquidated all of those purchases, right? 550 were used in that 600 plus 50. So the next one down is the 150 units. And the inventory must have come from there. Okay, so the next layer of what we have left is the August 21st units. And we'll pull the cost from the August 50th unit. Now I realize I'm doing some of this in my head, so you may have to lay this out in a schedule if that way works better for you. And then of course I can underline this. And now I think I've accounted for all the units. Yep, there's our 595, and the total cost is 27,000. And that's the value of Lifo with ending inventory. Now again, if you can't do those kind of intermediate calculations visually or in your head, you should lay out a schedule to help you solve it. Okay, and then the last one is specific identification. Alright, with specific identification, they have to give you more information, and we see that in here. They tell us every time you had a sale, they identify which specific units were used. So they tell us units sold came from 500 units from beginning inventory, 300 from February 10th, 200 from March 13th. Okay, so what we've got to do is put a schedule of how much from each layer, right? We pull from here, we pull from here, we pull from all of those. Now, rather than me typing that out, I've gone ahead and just posted the author's solutions so that you can see how we pulled. See, 500 units came from the beginning amount, 300 units came from the February 10th, and you just lay it all out. And you identify what the cost of sales were, then you subtract it from the 80,070 of cost of goods available, right, which we computed right here. And once we sum what the cost were, we can compute the ending inventory. So this here represents, let me put this down here, and I will call this specific identification. Now I said that they asked for 3 approaches, but as I was looking at that, they want a weighted average. So let's tackle that one next.